Hi there, welcome to Commodities. Let's check out the energy complex right now. We got a new sense of geopolitical risk in the crude market. Drones reportedly attacked 2 oil tankers in the Black Sea, and one of those was chartered actually by Chevron. Now, these companies were sailing towards a terminal on the Russian coast, which is a major loading point for most of Kazakhstan's oil, as well as Russian crude. That's according to Reuters, quoting sources who wanted anonymity. It's not clear who launched those attacks, but of course, Ukraine has been mounting drone strikes on Russian oil facilities. And here's an intriguing story by Reuters. Apparently, Adam Waterous of Strathcona Resources thinks that Canada should lend its heavy oil expertise to the U.S. as it seeks to rebuild Venezuelan oil. So he's got his eye on the Venezuelan crude. Waterous, of course, is the executive chair of Strathcona Resources and said this country has unique expertise in heavy oil, better than any country in the world, to help rebuild. And he says he's willing to send a technical team to help out. Let's check in on the metals market. We have seen a bit of selling today in copper and aluminum, but aluminum was trading at its highest level in more than 3 years, and copper is changing hands near record highs. You can see it's above $6 in U.S. trading now, and in fact, it has now gone above the level that it peaked at in the summer amid speculation that U.S. Donald Trump would slap on massive sanctions on copper. He didn't go as far as the market had feared, but that spurred a rush of copper into the U.S. market. There are fears, of course, that underlying demand for that industrial metal and for aluminum could soften. And we do have geopolitical conflict, which threatens economic growth in some regions. Some other stories we're watching in the resource space. CIBC analysts are forecasting a wider discount for Alberta's heavy crude this year. This comes amid U.S. plans to rebuild Venezuela's oil industry. And both regions have similar geology when it comes to producing crude, and they need specialized equipment to refine the stuff into products such as gasoline and diesel. We know, of course, U.S. refineries are set up to handle that kind of oil, and there's the risk that a significant increase in supplies from Vietnam would compete with Canadian exports. And Bloomberg says China is interested in easing some restrictions on canola products in exchange for relaxed tariffs on Chinese electric vehicles. According to that report, the Chinese authorities plan to discuss reducing levies on industrial products from China if the Canadians and in return, they'd be willing to take more canola. Canadian officials say they hope to ease trade frictions, but they played down any prospect of a quick deal on electric vehicle tariffs. And we've got Aya Gold and Silver on our radar right now. Production rose 2% in the fourth quarter, and the miner hit record production during the 3 months and the full year on strong output from its mine in December. The mine, of course, in Morocco. The company increasing its per-day ore production from the previous quarter by 14%. Okay, let's turn the focus back on oil. Oil up sharply today. We heard about that attack on tankers in the Caspian, no, the Black Sea, I'm sorry. And of course, that raises the prospect that Ukraine will do more, will launch more attacks to restrict flows of Russian oil and perhaps even Kazakh oil by default. Let's get more from Matt Smith, lead oil analyst at Kepler. Thanks very much for joining us. I was getting the Caspian and the Black Sea mixed up there. Thanks for joining us. Of course, we don't know much about this latest attack, but Ukraine seems determined to keep up pressure on Russian oil and could choke off supply to some extent.
Absolutely. It has definitely been this evolution, right? So we saw even at the turn of this year, they were putting limpet mines onto tankers as well. And so that opens them up, right, to be able to put a limpet mine on a tanker anywhere in the world. You were just getting sort of Caspian and Black Sea, talking about those different ones. There was an attack in the Caspian Sea just yesterday.
No.
Today is just saying about it's the Black Sea there off of Novorisk. And you see a lot of crude being loaded there. You do see some Russian crude, but it's a majority of that is Kazakh crude. And so these attacks really are just continuing because it's hurting the Russians, right? It's hitting them where it hurts. And so we've been seeing the onshore drone strikes on the refineries, on the terminals. Now they're taking it to sea as well.
And meanwhile, Russia has been letting more and more of its oil sit on the high seas in the Arabian Sea and off China. A lot of Russian oil at sea right now.
Yes, you know what? In terms of floating storage, we are seeing that at a multi-year high. It's at about 120 million barrels. And only a small part of that is Russian in the grand scheme of things, though, maybe 20, 30 million barrels, something like that. About 20 20 is Russian, 30 is Venezuelan, 50 million of it, though, is Iranian crude. And so you're seeing this theme coming through of sanctioned barrels being kind of stuck on the water.
Right. So not all that oil is actually originated in Russia. And Iranian oil also massive quantities sitting on the ocean.
Yes, and so it's not just the floating storage that we're seeing. And where you typically see that for Iranian crude is off of China, off of Malaysia, because essentially China is the only buyer for Iranian crude. So what they will do is they won't leave it parked in the Mideast Gulf there. They will take it to that demand hub and essentially leave it in a parking lot sat offshore there, waiting for the Chinese to bring it onshore. Now, you could make the argument that the Chinese are showing some hesitancy in buying that crude. They're shying off because of sanctions. You could also be skeptical about this and say, well, maybe they're putting the squeeze onto onto the Iranians, onto the Venezuelans, etc., to get that price lower, because inevitably that Venezuelan crude, that Iranian crude can't be sold anywhere else. And so it's partly to do with that. We're also seeing exports have continued to increase through last year from Iran up to about 2 million barrels a day. They do not want to shut in production, so they'd rather get it on a tanker and put it out into the world rather than cut back on that output.
Is the market essentially glutted right now, the oil market?
Yes, and so we have seen commodities on water increased by a couple of 100 million there. So we have seen onshore inventories increasing, but the majority of it is still on the water. And so it's in transit, it's in floating storage. But because it's not making its way into inventories, and also because it's going into Chinese inventories as well, it's having a muted impact on weighing on prices. And so you've still got that surplus that's going to keep coming through for this year. And it's going to be very much front loaded here, Andy, in terms of the first 6 months of the year. We're looking at a surplus of about 500 million barrels. Ultimately, that will make its way into onshore inventories. But until it really does, then it's not really having the impact on prices.
Frustratingly, obviously, for Vladimir Putin, a lower global oil price and discounts that he has to accept on Russian oil have been cutting into the value of Russia's international oil sales.
Yeah, absolutely. They have been. We still see that Russian crude coming out of pace, right? Because as you see those refineries getting struck, it just means they can't run it through those domestic refineries. And so they're able to export more of those barrels. That said, one thing that Putin does have in his favor is these pockets of geopolitical tension. Obviously, we've had this with Venezuela, all the uncertainty surrounding that at the beginning of the year here. The Ukraine drone strikes continue to lend some support to prices as well. And then you've got the situation with Iran. And so all of these factors here are lending support to oil prices. So if you looked at it from a fundamental perspective, we should be anchored in the 50s. But yet here we are just pushing mid 60s for Brent.
Oh, that's interesting. But Brent should be, in theory, substantially below $60.
Yeah, there's definitely a risk premium that's priced in there, and it's very difficult to argue against the increase that we've seen in recent days here has not been related to a geopolitical premium working into prices. Yeah, so fundamentals, as I mentioned, you've just got this oversupply, you've got this non-OPEC supply coming to market here at the same time as OPEC has increased barrels over the last 9 months or so. They have hit pause because obviously they're concerned, but it doesn't mean that non-OPEC supply is not continuing to come and increase.
Matt, thank you very much indeed for joining us.
Thank you.
Matt Smith, lead oil analyst at Kepler. Up next, Donald Trump keeping up the criticism and the pressure on the Federal Reserve. What about that so-called U.S. debasement trade in 2026? It has been lifting gold to record highs this week. We'll have more after the break. We saw gold this week hitting record highs north of $4,600. It's still above that level, slightly down, though, in trading in the gold futures, the February futures this afternoon. Our guest says gold is still well positioned to benefit from a weakening in the US dollar as a store of value. Let's get more from Daniel Galley, Director of Commodities Strategy at TD Securities. Daniel, great to see you. Thanks very much indeed.
Thanks for having me, Andy.
One point and I think some observers are making, though, we saw this new pressure on the Fed, this potential criminal charges coming from the U.S. government against Jay Powell. But we didn't see a dramatic reaction over the past 2 days in the U.S. bond market.
Yeah, that's right. The attacks on Fed independence were chilling for Wall Street observers. But the fact of the matter is, and I will say this, foreign holders of U.S. Treasury assets haven't panicked. Right? You can see that the U.S. two-year yield barely budged. Term premia has barely budged. FX markets have not really moved. The only thing that really has moved are precious metals. And in some sense, gold is really the best suited asset to benefit from the U.S. dollar's loss and store of value function. That's been the story over the course of the last year. But again, that also means on the other side that the story in gold is changing. This is becoming a market that is less premised on the wave of central bank demand supporting the gold price and increasingly premised on a continuation in the debasement trade that is now potentially nearing an inflection point.
Yeah, a US dollar has held up. It initially fell, as I'm sure you know, on Monday, but has since rallied. And I guess we won't get in. I mean, you can get into the weeds on this stuff, but you as well are in the camp that maybe Bernanke's has been strengthened here by this latest pressure with the huge rallying of support, for example, for him. Sorry, I should have said Jay Powell, not Bernanke. I'm living in the past. Go ahead. Yeah.
Yeah, that's right. I mean, that could be an unintended consequence as well, right? Certainly, it seems like Chair Powell might emerge from this as some sort of white knight when it comes to Fed independence. And you have a battle ongoing not only between the administration and Federal Reserves, but also in Congress around this. So I think that what we've seen is that trust in U.S. institutions has bent, but it's not broken. And you have these ongoing battles that can swing in favor of U.S. institutions as well. Most importantly is the upcoming Supreme Court case that will determine whether or not the Trump administration can exit sitting Fed Governor Lisa Cook.
That's interesting. If it was to go that way and Trump and his colleagues could squeeze her out, would that again cast a shadow over the U.S. dollar?
Absolutely. And I'd say that would probably be far more significant than what we've seen thus far. So far, perhaps the reason that trust in U.S. institutions hasn't broken is because they've not really been put to the test. And this is the first major test that they'll be facing.
What would be your view on gold? Does it have a prospect of getting to 5,000? I see Citi is now joining the camp of watchers who say, yep, gold 5K is quite plausible.
I mean, it does. Firstly, the gold vol has been significantly higher. So $5,000 an ounce doesn't even seem all that far from current market prices. But more significantly, what we're trying to get to is the fact that the debasement trade does have room to strengthen further over the course of 2026, and it also has the room to reverse. There's two-way risks in gold markets for the first time in several years, underscored by the fact that gold is actually no longer a fringe asset. In fact, the most popular physically backed gold ETF is now roughly 65% as widely held by institutions as the most popular ETF in history. That's a symptom of the debasement trade that took place over the last year. And the consequence of that is that for the next leg of debasement to really kick in, what you need is the shift in asset allocations, that those institutions place more capital into gold and potentially into commodities than they have in the past. It's certainly possible, but there needs to be quite a few series of tactical mistakes from the U.S. administration before that happens.
Let me just unpack that. First off, that ETF figure you gave, you were comparing the holdings in the biggest gold ETF to the holdings in the Spider S&P 500?
I'm comparing the number of institutions that hold the most popular gold ETF to the most popular ETF in history.
Okay. And then, sorry, so this more widespread holding of gold, Daniel, that could have a downside if the crowd decide to get out rapidly?
Yeah, I mean, if you think about it, what's occurred over the last year in terms of the debasement trade has largely been a function of sentiment. Warranted, but sentiment nonetheless. The pace of debasement can be dictated either by government actions or by market forces. And in the case of the 1970s, you had a strong case. Inflation was rampant, et cetera. That was a market-based debasement event. Over the last year, that hasn't really occurred. Inflation has been coming down. It's been well constrained. Inflation break-evens are pointing to subdued fear of inflation resurgence. So really, what it has boiled down to is trust in U.S. institutions that has weakened. Is there scope for that to strengthen from current levels is really key to answer your question.
Daniel, thank you very much. So, Daniel, we've only 30 seconds. Would you be a buyer of gold with new money right now? Do you say with a 6-month time frame?
Well, we are more neutral on gold at current prices. And in fact, we see further opportunities in other precious metals than gold and silver.
So are you more bullish on silver, for example?
On platinum group metals in particular.
Thank you very much, Daniel. I really appreciate it. Daniel Galley, Director of Commodities Strategy at TD Securities. Shares in Lundin Gold jumping about 4% today, hitting a new record like so many other producers. We'll hear from the CEO after this. Lundin Gold shares up more than 3% today, hitting a new record. Lots of gold mining stocks have been doing that. Production from Lundin's rich mine in Ecuador coming in just under 120,000 ounces in the latest quarter. And BMO reckoned the company produced at an all-in cost barely above $1,000 US an ounce last year. It thinks free cash flow would have topped last year $880 million, or $3.65 a share. And that's up from $2.42 in 2024. The company won't actually announce its actual financial results until February. We're joined, though, now by the CEO, Jamie Beck. Jamie, thanks very much for coming on the show.
Thanks, Andrew.
So you met guidance closer to the low end of the guidance for the year and the quarter?
Yeah, we had, original guidance was between 475,000 to 525,000 ounces. We actually raised our guidance bottom end to 490. So we eked in above that. I think we were trending north of 500,000 ounces, and an unexpected ball mill gearbox issue right over the Christmas holidays put us out for a couple of days. But still super pleased with where we managed to finish the year.
And you're happy. You're one of the richest mines of your size in the world. What are you, north of 8 grams a ton?
Yeah, we're planning for 2026 mining 8.3 grams per ton from underground. And that's actually down. I mean, the mine's now been operating for about 6 years. And so you're starting to see some of the grades drop off a little bit from the early years at Fruta del Norte, but still an absolute remarkable discovery and deposit.
So talk to us about this flood of cash you've got coming in. BMO, as I mentioned, sees your cash flow last year at almost $4 a share. And next year, depending what happens to gold prices, potentially going to almost $6 a share. So you're piling up cash like other producers right now.
Well, we're not really, Andrew. We're making a lot of cash, but I think what separates us from some of the other producers is that we're giving it back to shareholders. We have one of the highest dividend yields in the market. We have a fixed dividend of 30 cents a share, and we've got a variable dividend, which is a minimum of 50% of free cash flow. That we're returning all of that cash back to shareholders. Last quarter, we actually paid out 100% of our free cash flow back to shareholders as well. So, we've got cash levels at an appropriate position. And until such time as we need more, we're going to return that money back to shareholders.
That's interesting. I mean, other gold miners, I haven't seen a flood of big dividends and special dividends and dividend increases from the industry so far anyway.
Yeah, I think that's when you take a look at our performance, obviously the underlying business is performing incredibly well, but I think the shares have performed well, largely a result of our capital allocation strategy, and I think investors are appreciating the money coming back into their hands.
Yeah, you've done well. I mean, if you put up a comparative chart with you versus the gold index, the gold stock index, and that even excluding the dividend that you've been paying, it looks pretty over 5 years.
It's been a great story and a tribute to the team for quality execution on a great plan.
You found copper. You found some, what you say could be a huge copper deposit late last year. Of course, it will take years for you to actually get into anything like production of copper.
Well, yeah, hopefully sooner than later.
Okay.
We're trying to figure out what that means, but certainly the indications are these are district scale copper discoveries. We've had multiple porphyry centers now discovered, and these are nearby Fruta del Norte's mine. So this is 1, 2, 3 kilometers away, and we're getting intersections that are 600 to 800 meters deep, 1,000 meters along strike, 500 meters in width. So we're still sort of trying to understand the full extent of what we're onto here, but it's incredibly exciting. This no question will ultimately be an area of the world that produces a significant amount of copper alongside our gold operation.
It's interesting. Ecuador, long thought to be a tricky part of the world to produce gold, politically tricky. I see DPM Mining was running into big protests late last year. Tens of thousands of residents not happy about a mining project that DPM, TSX-listed Dundee, had. I know you don't want to probably comment on DPM, but so far you seem to be avoiding protests.
We've had such strong support locally. I was just in country and had a chance to visit with so many of the stakeholders in Zamora Chinchipe, which is the province in southeastern Ecuador where we are. They've been incredibly supportive of our project, and we've got solid agreements that the Ecuadorian government has stood behind. So, I think there's always political noise, and Ecuador is choppy like many other places in the world, but we've been able to navigate so far successfully, and I'm just thrilled with the relationship we do have in country with our stakeholders.
Yep, and a yield of about 3.7% on your stock right now. Thanks very much indeed. Really appreciate it.
Thanks, Andrew.
Jamie Beck of Lundin Gold. Thanks for watching Commodities.